We have been commissioning this report for about 8 years, so today we published the 8th in its series. And we really have an in-depth look in talking to chief investment officers, head of asset classes, chief portfolio strategists across 83 different sovereign investors around the world. What really stood out for me was how much better prepared sovereign investors were in dealing with the shock of this crisis than, say, 10 years ago with the global financial crisis. They had built up a lot of dry powder, so a lot of excess cash, because they were a little bit more cautious about the performance of markets towards the end of 2019. They had a very good year, but they were cautious about how toppy markets had become. So they decreased their equity allocations, and they had a lot of cash. So when it came down to measuring some of these opportunities that were available at really bargain prices, they're able to take advantage of those much more quickly. The main investment trends, especially for Middle Eastern sovereigns, is the increase in equity allocations going forward. So about half of Middle Eastern sovereigns that we interviewed hope to increase their equity allocations going forward, starting from a relatively lower base. And then the other, the other sort of different asset classes that you'd like to take advantage of is fixed income and private equity. The long-term trends, what we've seen over the last, say, 10 years, for example, the continuing uptake in sort of alternative investments, private equity, but more so what we've seen from the report this year is more of an increase in infrastructure, increase in communications, airports, other kind of infrastructure, as they tend to take advantage of the opportunities in that asset class and future-proof almost their portfolios to take advantage of the new economy.